Between $35 and $45 billion of funds are still tied up in crypto bankruptcies. That's according to a February 15th estimate from Xclaim. Now, some of the companies that went under in the industry's 2022 meltdown are emerging from bankruptcy.
All these different companies tied back to 3AC, and so when 3AC went bust, it really set a clock for the rest of them.
There were 2 tough years. We had Terra Luna collapse, we had FTX, we had Celsius.
So far this year, Celsius exited bankruptcy and began repaying customers. Core Scientific relisted shares on the Nasdaq, and lawyers representing FTX said they expect the exchange to repay creditors in full. Bankruptcy courts are challenged with untangling debt and assets in a relatively new industry. Then they face the difficult decision of whether to prioritize getting money back to creditors or rebuilding the existing business.
Not many of them are really being successful in relaunching operations. FTX, there was a lot of discussions around whether the exchange component, which during its heyday was really regarded as a very good trading platform, whether that technology was valuable and worth restarting, because if it was, then you could give creditors another pathway to their money back.
Bankruptcy's priority is to maximize the recovery and to keep the business intact, maybe in conflict to one another. It may be better to liquidate the company and get people their deposits back than it is to try to use those deposits to rebuild a company that nobody wants to do business with anymore.
So, if you're a customer who has money tied up in these companies exiting bankruptcy, what should you expect?
In the US, the assets of the company are valued at the time of the bankruptcy. If you had 1 Bitcoin at FTX, you're going to think, well, I had 1 Bitcoin. I should be getting $50,000. Really, what you'll get is $18,000. But because the prices of the assets have rallied so much, there's a better opportunity to cover all the customers for which there aren't the crypto deposits there.
First, it's important to remember that not all creditors are treated equally in bankruptcy courts, and that's exacerbated by the unregulated nature of crypto. The difference really comes down to secured versus unsecured creditors. Secured creditors get priority when it comes to repayment because their funds are backed by collateral.
You always have to make sure that the secured creditor gets its value back, because the bankruptcy laws are not allowed to hurt that collateral interest through the bankruptcy process itself.
Unsecured creditors, not so much. They're stuck at the back of the line when it comes to repayment, and many customers, like the ones at Celsius and BlockFi, are classified as unsecured.
And they were told in some of the marketing promises, especially in Celsius's case, that it's almost the same thing as if you deposited your crypto in your savings and loan and local bank. Well, the bankruptcy court ruled, in fact, you made a loan, and now you're left as a general unsecured creditor. That is very, very tough news to hundreds of thousands of customers who thought very differently. And it wasn't just Celsius. So BlockFi, for example, followed the Celsius rules. Add them 2 together, well north of 1 million customers found themselves not thinking that they were going to be unsecured creditors in a bankruptcy case, losing their savings, losing their deposits, and being stuck at the bottom of a priority ladder, fighting for scraps at the bottom of the case. But that's in fact how it ended up.
So when it's all said and done, how long should customers expect to wait before receiving their funds?
This is really a process that's dependent on how fast the courts move and how fast the regulatory agencies that are also involved move. So in the case of Celsius, there was an earlier plan to restart not only a mining operation, but also an operation that would run validators that could earn staking yield on tokens. The SEC got in the way and said, no, we don't want that. And because of that, it took a little bit longer.
Crypto companies are also looking to unique ways to make customers whole. Celsius has restructured into a mining business as a way to repay debt. FTX has looked to sell major crypto holdings to reach 100% repayment. Those asset sales have had an effect on the crypto market. Prolonged pressure on the Grayscale Bitcoin Trust as FTX sold its holdings weighed on Bitcoin's price for several days in January. Genesis has also been given the green light to offload over $1.3 billion of the product.
FTX, which held massive amounts of Grayscale Bitcoin Trust product, now selling that product because they have much more liquidity to do so via the new Bitcoin ETF.
And no matter what, the crypto industry still has to deal with the issue of public trust, which has been damaged by the slew of failed businesses.
The crypto industry has gone through 4-year cycles of what we call crypto winters and crypto summers. And as a company, you need to be able to weather that out.
it's kind of hard when you've lost trust and you've lost so much money into a system for anybody wanting to provide capital or otherwise provide trust. I root that all into the lack of regulation because people's expectations were dashed so significantly that it makes it very, very hard to feel like, why, once bitten, twice shy, why would I support it again?